everybody. I'm Peter Grant with Zaner Metals in the Denver office. Welcome to the first trading week of May. With me,
Absolutely.
Peter Thomas from Zaner in the Chicago office.
Welcome, everyone. Exciting week again. We haven't seen anything slow down. Velocity has been on both sides of the market. Lots of pressure hitting the metals on the potential of some good news coupled with a rally in the stock market, and lots of announcements being made here. The Ministry of Finance in China looks like they're pulling the proverbial rabbit out of the hat. Every time things get bad, they build another empty city for 40,000 people that don't exist, which is what they're saying they're going to do. They're going to build another city because they need it. And I guess they're going to tear down the old city and build a new city. So I'm hoping that while they're building the new cities to get their economy going, that they will be buying copper. So let's hope that at some point that bleeds into our market.
All right. Well, let's look back at last week real quick.
Sure.
Metals were under a little bit of pressure last week.
Yeah.
Gold closed down 1.7%, just below the 1700 level.
Right.
Silver was down 1.6%, closed at 1471. Platinum, continues to hold up pretty well.
Looks like it's looking for a bottom.
Yeah,
Yeah.
down just a little bit, less than 1% at 757.50. Palladium, on the other hand, down 6.5%. It was the fifth consecutive lower weekly close in Palladium.
Right.
And even though it was an inside week, so kind of generally consolidative, looking a little vulnerable in the Palladium market.
Well, we had a heck of a rally in there, just gigantic. So if it gives up a little bit from here, I think it's more of a reflection, Pete, of car sales than anything else. It's about time for that impact to come in there. So I think it makes a lot of sense. And I think also for those who've been following our show, you have been calling for 1685 for 2 or 3 weeks as your support number, which is exactly where gold went. And then Friday we had a very nice close going into the end of the trading session, and it closed back in the 17s again. So technically, from the work that you've been doing, you've been spot on.
Well, we were cheering for a close with a 17 handle, and it
Yes,
didn't quite happen. Futures
close
did,
enough, my
but
friend.
the
Close enough.
spot
Yeah, I
market
was
was
going to say
just below.
right,
So,
but the physicals, the coins were bid over, so we were in the 17s.
yeah, yeah.
Yeah, absolutely.
Well, so we continue. What I think is going on here, Pete, is there's some optimism in the market associated with global economies starting to open again.
Yeah,
It's something that I'm feeling here in Denver. Colorado did open this past week
that's good
for the
news.
most part, with the exception of Denver and Denver County. We're still on a
Locked down.
mandatory stay at
Yeah.
home until
All right. But
the
that
end of
means that
this week.
some people are going to get a little relief from little things like being able to eat and pay their rent.
Right.
Other than that, everything's fine. So
Yeah.
that's
So
good. That's good news.
yeah, so there is some optimism, but at the same time, the grim economic data, the
Well,
fallout from COVID-19 continues to roll in, and
all right, give us the damage. I know you keep the reports, and
right.
I'm sitting down, so let's have it.
First quarter GDP,
Right.
the first look at it was negative 4.8%.
Yeah, it was monstrous.
Yeah, and that's it was worse than expected. I think median consensus was minus 3.8%, so it beat that by a full percentage point.
Right.
It's the first negative GDP print since Q1 of 2014, and the biggest
008, 008, right?
and the biggest percentage drop since Q4 of 2008, when we saw
Okay.
a massive 8.4% decline
Yeah, that was
in
amazing.
GDP. So yeah, kind of grim
Yeah.
for sure.
All right.
And
So, but let's look at the other side. All right, we'll do the yin and the yang. All right, the numbers are coming in dismal. The unemployment numbers are frightening. But in my opinion, I think this goes to the discussions that we had 3 or 4 weeks ago about the shutdown of the mines, and especially the silver mines, because they move such volume. When you flip the switch to on, you have conveyor belts. You have the staff has to get in, get set up, get used to running the equipment. The new veins have to be explored. All there's just a ton of work that has to get done from the time you hit the on button until something comes out the other side. So let's look at it this way. Let's say, okay, Denver's not open, but around Denver is opening, and slowly in the next 2 or 3 weeks, let's hope that we start to see some more coming out the other side of that mine.
Yeah, I agree. Um, so let's take a look ahead for
Sure.
this week. We do have more economic data coming out. Obviously,
Yep.
Monday here is a big day. Factory orders are expected to be down 9.7%.
Yeah, I
Uh,
saw that number. It's a frightening number too,
yeah,
but it is what it is. People don't have money to buy durable goods, things of that nature either, and those numbers are going to continue to be bad too. So,
right.
are you buying a new washing machine, or are you buying a sack of groceries? And you know what the decision is. So that number's going to. We've got a couple more weeks of that number hurting too.
Yeah.
Yeah.
We'll see trade data. We'll see services PMI and ISM. Um, on Thursday, the Bank of England announces policy. I expect them to hold steady, much like the Fed did this past week. Hold steady, but talk big that they're prepared to do whatever it takes. The Fed this last week held steady on rates
Yeah.
and
Right.
then said that they're prepared to use all the tools in the toolbox
Scared the
and
hell
then
out of everybody, and then all of a sudden they rallied. I was like,
yeah,
what?
yeah. So
Yeah.
gold popped. That's an interesting
Yeah.
point. Gold popped
Yeah.
off of that for
Right.
sure, but it couldn't sustain those levels, and it fell back
No,
below 1700. So
and like I said, we're seeing some very very violent trade, and it's a very good reason to hedge inventory on rallies.
yeah,
Hmm.
yeah. So and then the ADP employment service survey comes out on Tuesday, um, expecting minus 22 million jobs,
Is that
and
what we're looking at?
it's the precursor to Friday's non-farm payrolls report,
Right.
which is median expectations minus 22.7
Is that right?
million jobs and a jump in the unemployment rate from 4.4% to 16.8%.
Yeah, we got to get stuff open.
Right.
That's the cure for that. Also, the to continue in Asia, and of course, the end consumption of 61% of all the copper in the world goes to mainland China. So, as we're
Well,
looking at
let's talk about copper for a minute.
absolutely, absolutely,
Um, so copper closed down 2% last week. So we were
right,
pretty encouraged the previous week with the close above 235. It did extend that rally,
yeah.
but again couldn't sustain. So what do you
Well,
think?
you and I have been discussing 235 as a pivot number. That linchpin number, when it closed over it, it then continued the rally, looked good. Ran out of steam on a couple of different announcements and started to drift. And then when it finally did close under 235, which has been our support and resistance number, it continued on down and went down to 230. Technically, you and I have been discussing this for quite a while. The question now is, do we trade 230 to 235? I think next week we're going to have to watch it.
Right. Let's keep a close eye on the
Yep.
copper market for sure.
Yep.
Other events that we've seen recently, um, we saw Venezuela sell some of their not sell, but give up some of their gold, about
Yeah.
9 tons, to Iran.
Right.
Iran apparently earned it by assisting in opening a refinery, I think.
Well,
Um,
which they desperately needed, by the way. So
right.
that's going to be a very big help to them. Let's hope that some of the people that are starving to death could get a cup of rice out of it, but it's doubtful. Pretty much all of the economy goes to support the army.
Yeah, so there were some rumblings that that 9 tons of gold might hit the market, and there was a little bit of pressure, but I I don't buy it. I you know
It's not going to, and in all reality, they've been selling gold for a year and a half, much of it going to Turkey, recently to Iran. So we've been seeing a lot going on, and the what we refer to as the tributary mines. I think you put an article on Twitter this week about the smaller mines coming out, and that's pretty much what you see in Venezuela. The smaller family-run mines, things like that, are all contribute
yeah.
to the pile, and so they're going to continue to have smaller amounts of gold that won't have major impact on the market, but hopefully will help a starving nation. That's pretty much it.
Right. I think the bigger story is, in fact, the starving nation,
Yes.
because, quite honestly, Venezuela now, in terms of like total hard currency reserves, is down to like $6.3 billion.
Yeah, I mean,
It's a
literally,
30-year low.
we have guys in New York who could write a check for that, and I mean that's pretty frightening when you think about it. And they, I think the number, I don't know how if it's spot on. At one point, they were sixth in all the natural resources in the world: gold, silver, timber, just amazing amounts of oil, and the people are starving. So the disproportionate amount of real assets available to the money that gets to the people shows you what happens when you run a government that way.
Yeah.
Hmm.
So we also continue to see dislocation in the gold market.
Yes, between
Um,
the LME and the COMEX, correct?
Right, right.
Yeah,
And so
yeah.
Janet Voima Gold wrote a really good piece that I think explains it greatly. And I would agree with the first part that, initially it was logistics and manufacturing. So the shutdowns of the mines and refineries, and then the logistics issue, because as gold moves around uh, the world to kind of satisfy demand, it typically flies on passenger airlines. And because
Yes.
of the curtailment of air travel, it just wasn't possible to move gold around. And so we got this dislocation, this contango between London and New York. Um, but the question was raised is, why do we still have it? 3-4 weeks kind of after some of the refineries in Switzerland started up at lower production rates,
Lower production, yeah.
uh, but things are starting to move back to normal. But we still have about a $15 contango
Well,
in gold.
I mean, let's be pragmatic here. I mean, first off, the Swiss refiners, as you aptly pointed out, are only running at 50% capacity, and that's just meeting banking demand. It's not seeping out into the public. They're not pouring kilobars. They're still pouring fatties or 400-ounce bars, and 100-ounce bars. So we're not getting the flow that we wanted to get. The contango, if you will, the overage between us was at 1.41. We're now down to 12 or 13 feet. So
Yeah,
we've had a pretty good setback there. So we're getting close.
right,
It's been it. I mean, that's a pretty dramatic drop when you get down to it. It's at least 50% of where we were, just a week or two ago.
right. So the opinion on the article was that a lot of the bullion banks got hurt
Yeah.
as a result of this, um, and the risk managers at those banks are like, hold up now.
Yeah.
we
Well,
we know that there's $15 to be made between the
right.
between
But on the
London and
spread, right.
Comex,
Absolutely.
but
Until you go to take delivery and then you find out that there's this thing called insurance and human beings have to get paid to move it. And then you ask to be reallocated, stamped. I mean, when you get down to cost, there's a lot that goes into the creation of a coin. There's a lot that goes into As a matter of fact, on our website, I have the 8 steps involved in the cost of producing a coin on the Zaner precious metal site. And if you ever want to see that, it's kind of interesting. And the cost of taking a bar, getting it delivered, taking the delivery, paying everyone along the line to finally get it to where you can have it either redelivered or poured into some type of coin. 30 bucks is really tight. I mean,
Right.
you're not rolling in the dough like you think you would be.
Right.
So, for
Well,
whatever that's worth, it looks good until you try to do it.
yeah. But
Yeah.
I think the bottom line is that the dislocation is going to persist for some time, and
Yeah.
um, but eventually it'll get straightened out.
Oh, sure.
As everybody gets back up to speed and the airlines are moving again, and they can move metal back and forth once again
Right. It's
to
and,
arb
and you
that
know what?
spread.
It's up to the central banks. I mean, if the central banks have indicated that they are thinking about doing some redelivery, maybe taking a little product out, we haven't seen that. So, has that happened? No. Are the politicians giving some lip service to it? Yes.
Right.
But as far as we know, and we deal in the metal, we haven't seen a bar. So the pressure is still going to be on for that.
Yeah. With
Yeah.
respect to gold, I'm still inclined to think that the metals are headed higher ultimately purely on the liquidity aspect as the banks, central banks and governments of the world continue to push, all kinds of liquidity into the market, basically devaluing the
Sure.
various fiat currencies
Absolutely.
that the path of least resistance in the metals is.
Well, the thing
uh,
is that here's another number which, I keep in touch with South Africa. I have some friends there, and they were telling me that the production of their gold mines, which are the oldest producing gold mines, I believe, in the world, are down 80%. 80%. I mean, they're going deeper. They're digging just as much, but the yields are down. So that could be one of two things. One is that the vein that they're in, the section of the mine that they're digging in, is having a lower yield, or that the mines have just gotten so old that they're coming to the end, which would be, I mean, they've been running for 120 years. At some point, are they going to run out of gold? It certainly is possible. And you take at one point, they were the second biggest producer. Now they're down to the fifth largest producer. Another week of lower numbers, they'll be the seventh. So if South Africa comes off the table as far as production, you're absolutely right. There's just, the gold market is an inelastic market. It will flux generally about 1.3% over a decade. So that coming off the table is very significant, Pete.
No, I would agree with that, and
Yeah.
there continues to be rumblings in the industry about peak gold, and I think South Africa specifically is sort of a microcosm of that
Yeah.
more macro
I,
um,
yeah.
view.
Yep. I
Yeah,
agree.
it it is a finite amount.
Oh, yeah.
Um,
No, there's no question about it. And you can't print it,
right,
right?
that is very true.
Yes. So that changes the whole game. So real quick, sales numbers, which I took down at close of the week. U.S. Mint sold 279,000 ounces of gold Eagles, which is up 12,500. It's been a long time since we've seen a good positive number like that. And silver in as far as the 1 ounce eagle, which is a beautiful coin, 728,500 coins sold, which is a whopping 400,000 coin increase in sales. So demand for product is tremendous, and the product's not there. The mint is officially still shut down, or did they ever call you back?
Uh, they haven't called me.
Oh,
They
it
say
must
they're
be
going to
so
call me.
important.
They
It's
never
just,
do.
it's like high school and dating with them. I think, it's
That's
just
right.
horrible.
I'll
I'll
call
call you,
you.
I swear.
Uh,
So, but I thought we should get those numbers out there so people know, hey, Demand is there. It's getting hard to find metal, and it looks like it's going to stay that way.
Yeah, I
Yeah,
think that's probably true. Good, solid retail demand, and
right.
uh, premiums are still elevated.
Yep. So
But
look for premiums to stay high for next week, and I don't think it's going to change. And look for a very sporadic market again, and hopefully we'll close a little bit higher, which would give us technically some very strong legs.
well, with that, I think we'll wrap this up
Absolutely.
and have a great week, everybody. I'm Peter Grant from Zaner Metals in Denver.
Stay safe and stay hedged. Sell good firm rallies so that your inventory has a good solid value to it. Thank you for dialing in, and give us a like and be sure to follow us. Thank you again.